Hello, welcome to the final module of the course Advanced Financial Accounting. And under this, we look at Advanced Corporate Reporting and IFRS and US GAAP comparison. And for this, we will look at segment reporting, earning quality and financial reporting transparency. We'll also look at the corporate disclosure and regulatory requirements. We look at the ethical issues in financial reporting and the major recognitions and measurements difference between the IFRS and US GAAP, and lastly the reconciliation of financial statements under the different reporting regimes. This module covers advanced reporting topics, especially in today's globalized financial market, and it includes segment reporting under IFRS 18, earnings quality analysis, ethical considerations, and key difference between IFRS and US GAAP. And having an understanding of these areas ensure transparent, comparable, and ethical financial reporting across jurisdiction. Looking at the segment reporting, which is IFRS 8, the IFRS 8 requires disclosure of operating segments to help users understand an entity's performance, risk, and returns. And an operating segment is a component reviewed by the chief operating decision maker for resource allocation and performance assessment, and the reportable segment must meet quantitative threshold. Example includes the 10% revenue, profit or loss or asset, and covers at least 75% of total entity revenue. Looking at earning quality and red flags, the high quality earnings are sustainable, predictable, and cash-backed, conservatively accounted for, and fully disclosed. And the red flag under this include the growing receivable outpacing revenue, the operating cash flow declining despite rising profits, the frequent changes in accounting policies, and significant differences between the net income and the cash flow. For corporate disclosure and regulatory framework, financial reporting includes financial statement notes, management commentary, the governance disclosure, and ESG reporting. And key regulators include IASB for IFRS and FASB for GAAP, and then FRCN and SEC for Nigerian locally, and SEC and FASB in the United States. The ethical issues in financial reporting: professional accountant must uphold integrity, objectivity, competence, confidentiality, and professional behavior. And common ethical dilemmas include earning management, fraudulent reporting, and pressure to meet targets. And proper response involves documenting concerns, escalating appropriately, and, if necessary, whistleblowing. There are major IFRS versus GAAP differences in terms of recognition. And for inventory, the last in first out is prohibited under IFRS and it is allowed under the GAAP. And for property, plant, and equipment, evaluation model is allowed under IFRS, and the cost model is required under the US generally accepted accounting principle. And for research and development cost can be capitalized under IFRS, and it's generally expensed under the US GAAP. And for impairment reversal, it's permitted under IFRS except goodwill, and prohibited under the US GAAP. Also for revenue recognition, which is IFRS 15 and ASC 606, they are largely converged, but differences remain in collectability threshold and licensing. And for statement presentation, IFRS allows more flexibility, while the US GAAP provides more detailed classification guidance. And as per extraordinary item, it eliminated under both, but historical differences existed. Reconciling IFRS and US GAAP financial statements. Reconciliation is needed for cross-listing, acquisition, and or stakeholders reporting, and the process involves identifying material differences, quantifying adjustments to profit and equity, and providing explanatory notes. And common adjustments include reversing capitalized development costs, evaluation gain, and also impairment reversal. In conclusion, advanced corporate reporting requires technical knowledge, ethical judgment, and cross-standard awareness, and professionals must stay updated on evolving standard, sustainability reporting, and digital reporting trends. And having a mastery of IFRS and US GAAP differences ensures transparent, comparable, and reliable financial statements in a global context. Thank you for following through from Module 1 to Module 10, and thank you.